Hey Slams people, welcome to the channel. Hope you're well and in good health. Okay, today we're going to take a look at gold. Now, you've probably seen the shiny object glinting somewhere on a piece of jewelry, whether it's a necklace, a ring, maybe at a wedding or wherever you might have seen it. But gold is actually a tool for investment, and it is something that has been used throughout ancient history. Now, people from the Indian subcontinent, North Africa, eastern parts of the world use gold as a means of preserving wealth, and it's normally passed on through the various generations to other family members. You see that especially in, like, for example, the Indian subcontinent culture. When someone gets married, they normally pass on gold from mother to daughter and so on, and it's a big thing. So let's take a look here on Dialogue Pakistan at this Turkish wedding. So you can see here in this video, this was actually a grand Turkish wedding. It was a tribal wedding where the bride received 2 kgs in gold, which is a lot. And then the husband, the groom, received 6.5 million Turkish lira. We'll work that out in a second, see how much that is in British pounds. So we've headed over to www.halalincome.co.uk, and then on the main header, the currency converter. So we'll scroll down here. So if you scroll down here, you'll come to this currency converter. So if you type in the digits, 6.5 million. So let's just see, is that right? Yeah, so that's 6.5 million. So what we need to do is find Turkish lira. So let's scroll and find Turkish lira. There we go, there's Turkish lira. And we'll scroll up to the top to find GDP. So there we have it, GBP, British pound. Right, okay. So 6.5 million lira is basically 6,500,000. You can see here. So that's 6,500,000, but don't put commas. It's just for the full digits. It gives you £117,640, basically, that figure there. So that's over 100 grand, 6 figures, 117 grand, just in that 6.5 million Turkish lira gift. And 2 kgs of gold. Right now, gold has been hitting record highs. So I think 1 kg of gold is worth roughly just under 80 grand in English pounds. So you're looking at probably somewhere around about 158,000 to 160,000 pounds in terms of the 2 kg of gold, roughly, something like that. So you've got like 6 figures, a few £100,000 there just in gifts. Now, if we head over to Investopedia, so this is a site about investing. So it says here 7 best reasons to invest in gold. So let's take a look here. So a traditional investing axiom is that gold prices spike, then there's economic uncertainty and geopolitical tensions. So we actually do live in a world which is quite dramatic, lots of wars happening, terrible things happening, lots of uncertainty and tensions and problems. For example, the genocide in Gaza, then you've got issues like Ukraine, Sudan, lots of issues happening all around the world. You've got climate change, all this kind of stuff. So geopolitical and economical uncertainties does tend to leave investors then looking for other places to invest. And one of the kind of like old school places to put money into invest into and have an investing strategy is gold. So it says here, recent years have put this basically to the test. So significantly, while inflation, employment, federal debt rates spiked, uh, a lot of basically there's been a rally in the price of gold. So gold reached record highs in the mid 2020s, despite bullish stock market sentiment. Precious metal has decoupled from its traditional correlations with real interest rates and the US dollar. Global economic uncertainty and geopolitical tensions are significant drivers of gold's appeal. Like I mentioned, lots of accessibility now, so you can get ETFs in gold, exchange traded funds, not necessarily just physical bullion. But personally, I prefer physical bullion, what you can smell and physically touch, so it's tangible. Other digital platforms do allow for individuals to invest in gold, which might be more convenient because obviously storage of gold bars, for example, security safe, that kind of stuff. Some people may want to secure it in a vault where companies provide that service. Gold's intrinsic value, which has existed for millennia, and industrial applications contribute to long-term stability in that particular investment. So let's scroll down here. So there's a history of holding its value. So gold has that history. So gold has maintained value over time. So unlike paper currencies, so cash, paper notes or coins and other assets which can depreciate, be attacked. For example, paper money can be attacked by inflation. So for example, if you bought a burger 10 years ago, it might have cost you, for example, £2. 10 years later, in today's contemporary world, the economic situation, the inflation, and all that, well, that same burger might cost you £6 when it's the same material, same ingredients, and so on. So that's basically what inflation does. Cash, when you have cash paper money. So behind real estate, it's likely the second oldest asset still traded, with many seeing it as a way to pass on and preserve their wealth from one generation to the next. So if you remember at the start of the video, we talked about different communities, for example, in the Indian subcontinent, like Pakistan, India, Bangladesh, where families hand over their gold to their children when they get married as a medium of passing on generational wealth from one generation to another. So it seems to be the metal will basically fall back on when other forms of currency don't work, which means it always has some value as insurance against tough times, uncertain times, and it's used in material in technology, dentistry, and other industries. You'll find a lot of tech items, maybe such as phones and computers, have some gold parts in there as well. So when you do recycle, for example, you could potentially take out some of the parts in the computers, and then when they melt it down, you'll get some sort of small, maybe a small nugget of gold, a little bit of gold out of that. It doesn't corrode, so it's quite a strong material. Doesn't lose its color, its shine, and it's better to work with. You can stamp it into a coin, and so on. So it has a lot of various different kind of benefits there in terms of usage. Hedge against economic uncertainty. So we've talked about economic difficulties, geopolitical tensions, wars, pandemics, financial crisis, climate change, so on. So gold's ability to maintain its value during such tumultuous times has often made it invaluable hedge against economic uncertainty. So over the last kind of 5 years, gold prices have shot up, especially with pandemic and other things that have happened in the world. So gold is that element that you can bet, you can rely on when it comes to economic uncertainty. Preserving your capital, so it helps build your wealth over time as prices go up. So it says still matters that demand for gold comes from being long regarded as a reliable hedge against inflation. So we talked about inflation and cash money. So when governments and central banks carry out expansionary monetary policies, like various things that they do, lend money, and they produce money, and all this other kind of stuff, fractional reserve banking, and other policies that they have, that can lead to inflation. So dropping interest rates, the risk of inflation eroding the purchasing power of fiat currencies becomes a significant concern for investors, those in the stock markets. But even if a rise in inflation might not lead to gains in gold, the metal remains a means of preserving capital, unlike fiat currencies, which can be printed, basically, which is a problem because that's where, when inflation comes in, it causes issues. For example, in World War II, people would turn up to places to get bread, but like now, for example, a loaf of bread in the UK might cost £1.50. At that time, because of inflation and wars and all that kind of stuff, um, people would turn up to a food space trying to buy bread with a wheelbarrow full of cash money. That just shows what inflation does. So the global gold supply increases overall by only about a percentage point a year, which is much volatility in between. Portfolio diversification. So if you're investing, you can invest in things like real estate, stocks, shares, ISAs. You can invest in other things like, for example, watches. And one of the means of diversifying your portfolio is to invest in things like gold bars, precious metals. So gold, silver, platinum, other kind of precious metals out there right now are very useful when it comes to diversifying one's portfolio. So the key to diversification, according to this article, is finding investments that are not closely correlated with one another. Gold has historically had a negative correlation to stocks, other financial instruments. So the late 1970s were great for gold, but terrible for stocks. The 80s were great for stocks, but terrible for gold. And the late 90s, mid 2000s were excellent for stocks, but horrible for gold. But right now, 2025, gold is smashing it. Prices have shot up exponentially. So gold is doing really well in terms of value at the moment. So as such, gold has typically had low negative correlation with other major asset classes, such as stocks and bonds. So it's an asset of its own and holds its own value. Okay, so you got geopolitical hedge. So currency independence, historical precedent. So you see a lot of banks, you see a lot of international countries holding gold bars in their own national banks as a means of holding value and basically wealth. Then you've got global recognition, as gold is universally recognized and valued. So everybody across the world values it, and it has been valued throughout human history. Supply chain resilience. So geopolitical events can disrupt supply chains for a lot of commodities, but gold's compact nature, high value to weight ratio, make it relatively easy to transport and move around via plane, air, sea, and trade can be undertaken in tough situations. Supply constraints. So much of the supply of gold in the market since the 90s has come from sales of gold bullion from the vaults of global central banks. The selling by global central banks slowed greatly after the economic crash in 2008. Production has increased with recycled gold making up the difference to meet demand. Obviously, we have a large percentage of gold which is featured in today's households as jewelry. Gold mining output fell to 2,444 metric tons in 2007 from 2,573 metric tons in 2000. Since then, gold production has posted a decade of gains, peaking at 3,300 metric tons in 2018 2019, before growing again to 3,644 tons in 2023. So you can see that the difference and significance of mining. Liquidity and accessibility. So gold's heavy, requires security. So it can actually be a security guard, like a physical person, or a big safety vault or a box. Seems that these things, you don't want to be carrying around a gold bar in your pocket, do you? So you've got to have some sort of security there. So basically, it's been a quintessential illiquid asset. In addition to its value, has often been tied to being anything but accessible. Not anymore. So unlike some alternative investment, gold is highly liquid given that the advent of gold exchange traded funds, digital gold platforms, the liquidity allows investors adjust portfolio allocation. So you can get ETFs, exchange traded funds, stocks in gold on the stock markets and trade it there. So it's digitally, so you can buy it digitally. You don't actually have to hold it physically in your person or somewhere secure. Gold ETFs. So the rise of gold exchange traded funds, aka ETFs, has vastly changed how people invest in gold. First ETF, the SPDR Gold ETF, launched in 2004, Tracking is priced with a fund management company. Holdings. Gold ETFs offer several advantages. Easy to buy and sell to regular brokerage accounts. No storage and security costs. Highly liquid. Some of the largest gold ETFs trading millions of shares daily, and diverse holdings from storing the metal, secure location to shares in company, well, they're diversified from that, that produce and mine the substance in an array of gold-based derivatives. Mining stocks, so you can actually buy stocks in companies, so that can outperform gold prices during bull markets and offer some dividends in some cases. Gold future options, so those are advanced, seasoned traders, investors. Gold futures options provide further ways to gain exposure to gold prices, offering the benefit of leverage. Gold futures are contracts traded on exchanges in which a buyer agrees to buy a specific quantity of the commodity at a preset price in the future. Options are another derivative. They give you the right to buy or sell a gold related asset without the obligation to do so. Many hedgers use future contracts to manage and minimize the price risk associated with the metal. Speculators can also use future contracts to participate in the market without any physical backing. Okay, folks, there you have it. Gold and why it's important when it comes to investing, how people have used gold throughout the ages as an investment tool, throughout generations, and why investing in gold can be useful. Okay, people, this is not financial advice. Always do your own due diligence when investing. Don't forget to like, share, subscribe. Check out the link in the description for various different offers there. And you can support the channel if you like the content by clicking the join button, paying a small monthly fee to support our work. Okay, people, have a nice day and catch you in the next one.